company issues 10,000 shares of rupees 10 each at rupees 11, and the money was payable in 3 installments, 3 plus 5 plus 3. If the question is silent regarding the inclusion of premium, we can assume that the money was received, premium money was received at the time of allotment. In all these questions, we have assumed that company issues 10,000 shares and company receives the application for 10,000 shares. Practically, it is not possible. All the previous questions were on the assumption that subscription was at par, which is practically not possible. We may receive more application than issued shares, and we may receive less applications. For example, the company issues 10,000 shares of rupees 10 each, and the money was payable 3 plus 5 plus 2, means at par. The shares were issued at par, but applications were received only for 9,000 shares. It means we have received less application, and practically it is possible. If it happens, this situation is called under subscription. Now the question is how to handle this type of situation of under subscription. It's quite easy. Let me start the question again. Company issued 10,000 shares of rupees 10 each, and the shares were issued at par, and the money was payable in 3 installments, 3 plus 5 plus 2. Applications received were 9,000. This is under subscription. In this situation, you have to start the questions with 9,000 shares. Now you forget about 10,000 shares. Means the money will be received on 9,000 shares, and the money will be transferred to capital at 9,000 shares. So let's start the question with 9,000 shares. Now forget about 10,000 shares. What will be the journal entry? Bank account debit to share application account debit to share capital account, and the amounts will be 9,000 into 3, 27,000 rupees for both of them. Then share allotment account debit to share capital account and bank account debit to share allotment account, and the amount will be 9,000 into 5, 45,000 rupees for both of them. Then first and final call account debit to share capital account, and then bank account debit to share first and final call account, and the amounts will be 9,000 into 2, 18,000 rupees. Suppose company issues 10,000 shares of rupees 10 each. The money was payable in 3 installments, 3 plus 5 plus 2. But company received 11,000 applications, means applications for 11,000 shares. So one thing is clear, you can see in this question, the company has received the application for extra 1,000 shares. This is called oversubscription. Oversubscription means when company receives applications for more than offered shares or more than issued shares. If company receives applications for extra shares, it doesn't mean that the whole of the applications will be accepted. In fact, 1,000 shares will be rejected, and it is always done on the basis of lottery. The company doesn't have any right to pick and choose and reject the shares. In this situation, by lottery, 2 lots will be made for 11,000 shares. One lot will be 10,000 shares and second lot will be for 1,000 shares. It all will be done on the basis of lottery. All these 10,000 applications, be careful, in all these questions we are assuming that one person is applying for only 1 shares. it becomes quite easy for understanding. So in this way, 10,000 applications will be sent letter of allotment. When the company sends letter of allotment to the applicant, it means the company is saying that your share has been accepted, your application money has been accepted, and now be ready for the next installment. Means be ready for sending money on allotment. And second lot of 1,000, they will be sent letter of regret. Letter of regret means your application is being declined and your application is not being accepted. In that situation, the money is returned to the shareholder. Means every letter of regret is attached with a check of refund. So let's do the journal entries. First of all, journal entries for share application. The journal entry is bank account debit to share application account debit to share capital account. But in this situation, there is extension of one journal entry, and that is two bank account will be added in the transfer entry. Means transfer entry will be passed as follows. Share application account debit to share capital account to bank account. And let's see how the amounts will be for the journal entries. For bank account debit to share application account, 11,000 into 3, 33,000 rupees. Because we have received 11,000 applications with 3 rupees each. So money received on application is 33,000 rupees. And you know, application account will be cancelled immediately. Means share application account will be debited by rupees 33,000. And to share capital, because in this situation the company cannot credit the capital for more than 10,000 shares. In this situation, we have to credit the capital of rupees 3 on 10,000 shares. That will be 10,000 into 3, 30,000 rupees to bank. I mean, this is the situation of returning money, because we have returned money on 1,000 shares. So application money was received 3 on each application. So 1,000 into 3, 3,000 money means the money of 3,000 rupees will be returned. In this way, this is the new situation for you, that money has been returned with letter of regret. Now 1,000 shares have been rejected. We have got only 10,000 shares. Let's start with allotment. Share allotment account debit to share capital account. That will be 10,000 into 5, 50,000 rupees. Bank account debit to share allotment, 10,000 into 5, 50,000 rupees. Now share first and final call account debit to share capital account. Bank account debit to share first and final call account. And that will be 10,000 into 2, 20,000 rupees for both of them. So in this way, you can see if there is situation of oversubscription and the shares are rejected or declined, how you will treat the whole thing. The money will be returned at the time of application transfer entry.